now. Welcome. It's nice to have you all here. Uh, so, uh, as always, uh, we start doing our work on the indices, so we can identify the strongest of the currencies that is working or that's been developing all of last week. We identify the reversals, and we also try to identify the weakest currencies, and that is how we primarily trade. And you should always be doing that, specifically in currencies. This is the right way, or the correct way, to trade currencies, um, because as you well know, you're always buying one currency and selling the other. So you always want to be buying the strongest currency, so that this is the idea. I just want to share it again with you. So if you are going to be buying something and you want it, let's say from here, you want it to be going up like that, and if you're selling the other pair, let's say you're selling it from here, so the more this travels to the downside and the more the other one travels to the upside, the strong one keeps on going up, and the more the weakest one comes down, the more the distance between both that you capture, and the more that distance that you capture, the more profit you're going to make. And that is why it is necessary always to be looking at buying the strongest of the strong and selling the weakest of the weaks. And I'm saying this also for you, Barbara, because you mentioned that you had a good trade in the euro last week, which I'm very happy for you. So this week, what we try to do, we try to see how the euro is faring. If it is continuing in its weakness, then we will take it. If it has strengthened during the week, then we will look to change our bias. Or if it gets into a neutral zone, then, well, we don't need to trade the euro this week. We might wait for it and find something else that is moving, so that we can, because you make money when the currency is moving, and you give that money back, the profit back, when the currency or the instrument that you're trading moves sideways. So you always want to buy something that's moving. Each of us has a favorite currency, and we want to be trading that favorite currency when it is moving, not when it is sideways. All right, so let's take a look here at what we have. First of all, let's look at the dollar, and we know now we had the dollar had a pretty rough week last week, and it has sold off against the Swiss franc, and it has sold off the Swiss franc, and it has sold off against most of the major currencies. So you can see on the weekly chart, the dollar did had a pretty weak trading week. It put a low of 76.97, and it actually did break the low of this week, and it closed the week at 77.30. This is quite a weak close, and we should be looking for a continuation to the downside. Actually, in the dollar, we might have like a little bit of a short covering or a slight covering in, but not yet as far as the dollar goes. So the weakness continues in the dollar. If you look at the daily chart on the dollar, you can see that Friday was kind of a positive day. It's not it might might have moved. I mean, this is considered like a short-term buy in the US dollar, so we might be getting a little bit of a short covering on Monday. But as far as the dollar index would go, we will, if you look at the close of the day, which is 77.30, I guess if we trade above 77.50, we might have begin to see the short covering coming into the US dollar. But still, until then, we should be looking for a continuation to the downside. If you look at the euro, that is a sell signal as far as I'm concerned in the euro, even though we had a decent move up during the week. But this is quite a reversal, and we may wait for a break. And as you see, for example, look at the euro. It's just sitting at the break point, which is 137.40 or 137.37. So this is for you, Barbara, the index. If it breaks below the 137.37, this is where you want to take it again to the short side. Right here it is negative but neutral. It didn't break now or give us the next sell signal. The British pound, and I'm taking them in the order of weakness, and as you can see now, the euro has a sign of weakness, or gave us a sell to neutral kind of a signal. But the pound here, as you see, is quite negative. It's quite bearish. It has broken below the 162.71 2 days ago, and that was our selling point. And now it came 200 pips below the selling point. So the pound is weak. So I have the dollar weak and I have the pound weak. If we look at the Japanese yen, you can see this has had a fantastic week. The close of the Japanese yen at 122.24 is pretty much in line, and that would indicate that we should be getting a continuation to the upside. This is not by any means this is a strong close, and it should indicate for us that the yen strength should continue. Also, if you look at the Swiss franc, that is also quite strong, and it has closed above the selling point. Our selling point is the 107.62. We did break below that point during the week, but we did not have any follow through. But we turned around and we came back above the selling point, which is the 107.62. So it is so between the euro and the Swiss, they are positive, but they are sitting right at the selling points, and I'm going to show you again so that you can remember what I'm saying. So this is the selling point in the Swiss index is 107.62. If you look at the euro, the selling point is a 137.37, and we're sitting 137.41. So we're sitting on top. So right now the euro is still positive, but it's sitting at the selling point, so it's neutral. The same thing with the Swiss franc. And if you want, you can take a look at the dollar, and it's pretty much the same. The dollar is sitting right below the buying point. So the dollar is coming from down to up, and it's one day, it doesn't change the trend. But if it goes above the 77.35, or if it goes above the, let's say, the 77.50, then we begin to see the short covering in the the pound, and the weakness will come in into the euro and the Swiss. The British pound, as I showed you, is already weak. It's already in a selling mode. So far the weakest of the currencies right now is the British pound, followed by equally the euro and the Swiss. The dollar is, if it gets above the 77.50, then we're going to get some short covering. Now we come to two interesting currencies, which is the Australian dollar and that is simply magnificent. I mean, this is definitely one of the currencies that we should be looking at, pinpointing our entries to hold it to the long side. This is a currency that wants to continue up, and it so far seems to be the strongest currency in the world today. So it is a currency that we need to be looking at, and every time we get a sell signal it turns around, it gets a sell signal, it turns around, and every time it sells the below a sell signal, that selling point is always shallow. So if you see the sell here, it was very shallow after the sell signal. The second time it actually was shallower, and now we're breaking to the upside. And so the only thing that is going to slow the movement of the Australian dollar to the upside would probably be if we get any movement to the upside in the dollar with any magnitude. So if you see any buying coming into the dollar with a I'll answer it, Ross. Ross, guys, let me just what I'm saying is this is now the strongest currency, and what we need to do is to make sure that when we are buying it, we want to be buying it while we are not catching the move up within a when the dollar, for example, begins to get a short covering. So if you can see this day, this red day over here, that was a good opportunity for us to buy. So our buy should have been at or around the 10033, which was Thursday or Friday. We could have taken it Wednesday night or Thursday. That would have been the good time to buy it, and right now we would be up about 150 pips. So we always want to be buying it in the pullback as long as it is above our selling point, because we don't want to be catching it right in the move. But the Australian by far is the strongest. And if you look at the next one, which is the Canadian is pretty much the same as the Australian. It has been moving again pretty much to the upside, and it's beginning to part from the US dollar. So if we're going to wrap up, right before I get there, I want to show you a couple of more things before we do our wrap up. This is a couple of interesting points. If you look, one of the primary things that support the US dollar, and one of the big things that puts pressure on the dollar is the crude oil, and what puts support is the stock market. So if you look at the S&P, we had 3 days of decline in the US stock market, and then Friday we began to turn back up again. And that, as you can see, if you look at this big move on Friday on the S&P, same with that on the Nasdaq, and the same on the Dow Jones. See all of those? and they are pretty much one and the same as that in the US dollar. Look at the US dollar. So they're all pushing together, and if we see on Monday and Tuesday and next week that the stock market, the S&P and the Dow Jones and the Nasdaq are pulling higher, then that would be our first sign at least to start shorting the dollar and looking at other opportunities. And also, as you can see, that the crude oil, of course, because of the event in the Middle East, is still up, even though you had this red candle. Is by no means a sell signal in crude oil. It's not at all. It's still a buy, and that volatility is going to remain as long as the situation is developing in the Middle East. So do not take that red candle as any sell signal, because that red candle has been negated by the candle that follows it. Okay, so that all is just a general. The market, the gold is still going up, the silver is also, and these are all kind of supportive to the event. And even copper came back and initiated a buy signal on Friday. So gold and copper giving us this buy signal on Friday. This is also supportive for the Australian dollar. So just to wrap our positions and the hierarchy, if you will. So if I go back, so the strongest pair or the strongest currency so far that we have is the Australian dollar, and then the Canadian. The first one that is beginning to hint towards a buy, the first currency that is beginning to hint towards a buy is, and that buy is a short covering buy, is the US dollar. So I'm just gonna give it one plus, or I mean I'm gonna do plus slash minus, so it's kind of neutral. So we're just gonna keep an eye on it. The same thing is with the one minus, it would be for the euro, and the same thing with the Swiss franc. And the weakest this week is the British pound. The yen also, I'm sorry, the yen is also quite strong. So we would be looking at buying the Australian, and we're going to be timing ourselves in buying the Australian, buying the Canadian. We might, so in this case we can do the buy the Aussie euro, CAD euro, Aussie dollar. We'll be looking at being short the British pound and the Swiss and the euro outright if we have a break below the entry points that we are going to identify now. Okay, so that's primarily the hierarchy we'll be looking at, focusing on buying. And when we do this hierarchy, guys, it gives us also a what if scenario. So if the strongest is the Aussie and it gets below a sell signal, then that actually becomes a very strong currency to either to trade on the long side or the short side, because again it gives us a good opportunity. Okay, so we'll be focusing on the Aussie and the CAD, the yen from the long side, and the dollar, the euro, and the Swiss and the British pound from the short side. Okay, all right, now let me put